Hello all, I'm Surya SK from BA LLB, and today in this lecture we will be seeing what is a balance sheet and how to prepare a balance sheet. Before starting off with what is a balance sheet, it is very important to know that the balance sheet is one of the reports of a financial statement which provides the financial condition on a given date. An entity's balance sheet provides a lot of information which can be used to analyze the financial stability and business performances of the firm. Now let's see what is a balance sheet. Balance sheet is nothing but position statement that shows the financial position of the business for that period by showing the assets and liabilities of the business. It records the assets and liabilities of the business at the end of the accounting period. It depicts liabilities and assets as during the end of the year. Assets are depicted on the right hand side, whereas the liabilities are depicted on the left hand side. The total of the both sides, that is, assets must be equal to liabilities. Assets is equal to liabilities in a balance sheet. Balance sheet is prepared after trading and profit and loss account. Balance sheet is an important tool used by outsiders such as investors, creditors, and other stakeholders to understand financial health of an entity. On the top of every balance sheet, we should write the heading that is the balance sheet as on the specific year, whatever the year mentioned in the balance sheet. On the top of every balance sheet table, we should write the heading that is balance sheet as on specific year. That is whatever the year is given or the mention in the question. This is because, as I said earlier, balance sheet shows the financial position of the firm at a particular point of period. And this is how a balance sheet looks like, with the heading balance sheet as on the specific year and liabilities to the left side of the balance sheet and assets to the right side of the balance sheet. We have seen what is a balance sheet. Now let's see how to prepare a balance sheet. Let's start up with the asset side. The asset side of a balance sheet begins with current assets. Those current assets are those assets that can be liquefied in cash easily. That is, they can be converted to cash within 1 year. There are many current assets like cash, debtors, investments, inventories in the sense it is a stock, and accounts receivable and other current assets. Therefore, these all current assets constitutes to the total current assets. The next item is fixed assets. These long-term assets that are not easily liquefied by cash and are kept in business for a long period of time are called the fixed assets. The fixed assets consist of land, building, plant and machineries and all other long-term assets. And here the fixed assets will be calculated after subtracting the depreciation from the all respective fixed assets. And there are other items like intangible assets. Intangible assets are those assets that are not tangible in nature. They cannot be seen or touched. For example, goodwill. And then comes the closing stock. Here the closing stock is added because the stock of goods that are in hand at the end of the year is carried forward to the upcoming year. Therefore, the asset side is completely over. From here, we can say that total assets is equal to current assets plus fixed assets plus other assets. And now the liability side begins with the current liabilities. Current liabilities are those liabilities which are paid within 1 year. The current liabilities includes items such as creditors, accounts payable, salaries, accrued interest and taxes payable, and these are the outstanding expenses. These constitutes the total current liabilities, and then comes the long-term liabilities. Those liabilities which are payable after 1 year are called the long-term liabilities. Now the next item is shareholders' capital. The capital here is the amount brought in by the owners for the conduct of the business. To the amount of the capital, drawings will be subtracted because drawings are the amount which is withdrawn by the owner for the personal use. And to this amount, further amount, the net profit of the year will be added. The net profit will be obtained from the profit and loss account. If in case the profit and loss account shows net loss, then net loss will be subtracted. Now let's see how to find whether it is a net loss or a net profit. If the total of the debt side of the profit and loss account that depicts the expenses is more than the credit side, it results in net loss. And if the total of the debit side is less than the credit side, then it is a net profit for the period. Therefore, the net profit is equal to gross profit plus other incomes minus indirect expenses. And all these items constitutes to the total liabilities. From here, we can say that total liabilities is equal to total current liabilities plus the long-term liabilities plus shareholders' capital. From this, we can see that after completing all these steps, we can see that the asset side of the balance sheet will be equal to the liability side of the balance sheet. And this is all about the balance sheet. Thank you.